Hello, everybody. This is Matt Fick from Financial Life Planners, and this is your stock market update for the week of February 18th, 2025. As I'm sure many of you know, the market has been rallying the past couple weeks here after the slump that we had at the end of the December and beginning of January. And I wanted to talk to you guys today about the all-time highs that we're hitting, as well as how market growth over the past couple of years may affect some changes in your portfolio. So I'll start off by showing you guys a chart, as I always do, of the S&P 500. All right, and here's a chart of the S&P 500, a daily chart, and you can see today we closed at 6,129. That just barely beats out the old high of 6,128 that we experienced at the beginning of the year here. If we go out to the weekly chart, it kind of paints a better picture of how we are continuously hitting new highs when the market is doing well. You can see this rally really started at the end of 2022, and through the good times in the rallies, you can see that we continuously hit these new all-time highs. And what this growth has done in the stock market has really affected your portfolio. Some of you will have noticed that your asset allocations may have shifted out of what they were originally set to be because of that equity growth. And since equity growth has been so prominent, you might have gotten a little more aggressive than you intended. And so what you might see from us in the next couple weeks here, as we're analyzing everybody's portfolio case by case, is that we might sell off a little bit of your equity holding in your portfolio and raise a little bit of cash and maybe move that cash either into fixed income or a different asset allocation. And this change isn't necessarily because we're expecting the market to do poorly this year, but we don't have a crystal ball ultimately. And if you are taking more risk because you have more in equities than your original risk tolerance allocated for, then we need to change that back and bring you back to your original risk tolerance. That obviously is case by case. And although we don't have a crystal ball, we can take a little bit of risk mitigation here by changing up that asset allocation and pulling back a little bit of equities, raising some more cash, and re-diversifying it from there. But as always, if any of you have any questions about your specific portfolio, feel free to reach out by phone or email. And that's all I really have for you guys today. I hope everyone had a happy Valentine's Day last Friday and that everyone has a great rest of your week. And we will talk to you next Tuesday. Bye-bye.